Good morning, it's Alex Woods here, financial mis-selling litigator, and I'm going to do a quick canter through a number of different areas of law in order to give you a summer refresher on various issues, legal cases, feedback, updates on my cases, updates on the law firm that I just set up in February, and other sundry things relating to the wonderful world of financial mis-selling litigation. So, the first thing to say is, as always, this is a video aimed both at consumers and those with an interest professionally as lawyers or those claims management companies, people who work for the Financial Ombudsman Service, bankers who may be bored of watching the usual stuff or taking listening to the I don't know, bankers who may want a different perspective on financial mis-selling. Anyway, so I'm going to cover a number of different areas, and I've listed them below so that you can, fast forward to the section that you're interested in. So it should be relatively easy to find a section that relates to you. So the first thing to say is that I've had probably 6 months since I last posted on the cases that I've been running, and specifically I'm going to talk about now the credit card cases that I've been running. And the news to report is I don't run hundreds of cases, I barely run dozens of cases, but I've got progress on a couple of credit card cases. For reasons of confidentiality and a gagging order that I've signed, I can't talk too much about I can't give you the names of the cases or the names of the banks in question, but they are both big retail banks or credit card companies. So the first one is an interesting one. It's taken 2 years for the matter to get to trial. It's being heard in the early autumn, so the consumers had to wait a long time for a result, and it looks as if we're not going to get a lot more, perhaps a little bit more, but not a lot more than was originally offered. So that's an example of the risks of litigating in a credit card case. This is it was quite an old credit card. There are always these risks that the consumer will take 2 or even longer years trying to get redressed by issuing proceedings and end up with not very much. So that, as I say, that comes up for trial in the autumn. And my concern, in fact, is that he may not get much more than was, as I say, than was originally offered by the bank. I think it was about 7,000 or 8,000 that he was originally offered, and we're now around the 12 to 14 grand mark, and there's a prospect of us sort of settling down the middle at 8, 9, 10. So there's there's that. The other case that I want to refer to is sort of quite the reverse. That was a case that was a very small offer was made before we were instructed, and the offer has increased tenfold. And as I say, the case has now been settled, and the other side have agreed to pay 10 times what they originally offered. And significantly, in this particular credit card case, their offer required that the client should set off his compensation against the balance on his credit card. Now, we fought that quite strenuously. We fought the other side quite strenuously on that issue, and they capitulated. So there are kind of a number of issues with these complex PPI cases, and two of the key issues is obviously quantum, but there's also the issue of set-off. And consumers need to be alive to the fact that they might bring a claim through banks, they might even bring a claim through the Financial Ombudsman Service, and the Financial Ombudsman Service may accept their appeal and tell the banks to pay out, but the banks will have a discretion. It's within their realm to decide whether to pay you the money in cash or to set it off. They are allowed to, in certain circumstances, to set off, and so that's an issue one has to be alive to as well. So I'm now going to talk about PPI and repossession proceedings, and I think that really is an area. And don't forget that I operate in quite a small, if that's that circle represents the entire wonderful world of payment protection mis-selling and the quantity of mis-sold payment protection policies there are out there as far as consumers are concerned, then I operate in like a small sort of circle like that, perhaps slightly bigger, but like that. It's quite niche. I'm dealing with complex, only the complex cases. But the interesting thing about where PPI has been attached to a secured charge on someone's house, then I think that it's automatically that category of cases is automatically complex and requires the services of a lawyer. I don't even think a consumer could do it on their own. You know, I encourage people to bring their own claims on the small claims track, and you can read about that elsewhere on the video on the blog. But I think where you've got a payment protection insurance attached to a mortgage and there's a threat of repossession proceedings because the consumer's struggling to keep up repayments or has even gone into arrears, or indeed you may have been in a situation, as is the case in the repossession claim that I've got that's coming up for a court hearing in August. You know, it's just too complex for anything other than a specialist, not just any lawyer, but a specialist lawyer. This particular PPI and repossession claim that I've got at County Court in Portsmouth, the lawyer who was initially instructed was a court lawyer providing services, you know, at court for consumers who found themselves unrepresented. You know, it was too complex for them. In fact, they kind of sided with the bank's argument and felt there was validity in the bank's attempt to get the court to grant a repossession order, or at least a suspended repossession order against my clients. Now, that was back in September, October time. Now, you know, 8 months later, the case has come 180 degrees, and in this case Lloyd's, I believe, are somewhere on the back foot. They've now realised that they missold the payment protection insurance, and here's the worst bit about it, because you can forgive someone for having done a bit of wrong and missold a payment protection insurance product if they then clean up their act afterwards. I'm ashamed of Lloyd's, because I've been a customer of Lloyd's all my life. I'm really ashamed of my association with Lloyd's, not because of the mis-selling scandal, but because the way that they've cleaned up is as reprehensible as the way in which they missold it originally. Certainly in the case of this elderly couple from Portsmouth who were borrowing some money from Lloyd, putting themselves into Lloyd's hands, and the bank manager, you can't call them bank managers anymore, the salesman flogged them a off-the-shelf payment protection insurance product, which they actually decided they really wanted, because the wife was running her own business, and the husband was, you know, approaching retirement age, and he was working for a company, he'd been there a long time, but the company was restructuring, and there was prospects of redundancy. And indeed that's what happened. So they actually bought into the payment protection insurance, but because it was off the shelf, it was a bit like the salesman sold them a tractor engine when what they wanted, when they had a Mini, so it didn't even fit in the car, and they didn't want to plough any fields, they just wanted to commute to work. So it was a worthless but very expensive product, flogged. It was £12,000 that they had to that they were given up front, and they had to pay interest on for the life of the loan, a single premium. So they were flogged this worthless product, and then they actually decided they wanted protection. It was completely the inappropriate product, and then when they complained and realised that they'd been shafted, what other word is there? They then complained, and Lloyd's have got a huge football pitch size complaints operation in, I think it's Newport in Wales, and the bank manager, the local branch manager, took the complaint quite seriously, and she was quite nice to them, but she just bounced the complaint off to Newport, where some wet behind the ears teenage assessor just sort of wrote barely a one-page letter that completely missed all the points and just bounced back a rejection. I mean, I'm afraid to say that Lloyds are on the same sorts of targets in terms of, and the poor staff are on the same sorts of targets, and they're now all a lot of them are sort of self-employed, and if they don't hit their targets, they don't get their temporary contract renewed. So the poor assessor at Newport in Wales is under pressure to find in favour of the bank, probably. So having got that bit of paper which said rejection, which went back to the local branch then ploughed on, said, well, your complaint has been rejected, you've fallen into arrears, we want your house, thank you very much, and we're going to drag you to court in order to get it. So that's the position in which my clients found themselves in the autumn of last year, with a duty solicitor who didn't really know anything about payment protection insurance. Fortuitously, they stumbled on a website of an introducer who occasionally comes to me with, with complex PPI matters. So I'm quietly confident. Watch this space. The hearing is it's the beginning of August, 1st of August. We're now in July. I'm quietly confident, July 2014. I'm quietly confident that we've now done a lot of work and we've exchanged witness statements, and they haven't produced a witness, surprise, surprise, at the time, and there's huge holes in the paperwork around the mis-selling, which took place back in 2005, and fingers crossed, we're quite confident that we're going to get a good result, and the loan will be restructured and they'll completely drop their application to repossess our client's home and actually reduce the loan amount, and most importantly, of course, pay my bill, because I work on a no-win, no-fee basis. So now, moving on to doing it yourself in the Financial Ombudsman Service. Now, I've been trialling with Maple Leaf Financial, a reputable claims management company, in my humble view, one of the few, if not the only one I found out there. I've posted about this previously, the do-it-yourself support, legal support operation that we're trying to pioneer, and but we've run into choppy waters, I have to say, on this video, because we found that in the dozen odd small claims that we've brought, and which we wanted to encourage the consumers to bring themselves, with just Maple Leaf offering a support service and me offering legal advice and assistance where necessary, but not getting involved, trying to encourage people to bring their own litigation. This is off the back of the increase in the small claims limit from £5,000 to £10,000. We've got into choppy waters over that, because not to the detriment of the consumer, but we've had to get more heavily involved than we would have wanted to, because the banks have come back quite hard, and even though these are cases where they've already upheld the complaint, and we're actually asking them for compound interest on the PPI claims, because we don't think single 8% was appropriate in the cases of these clients, because they had credit cards at the time that they were paying their monthly repayments on their secured loans, or on their personal loans. So we've run into choppy waters because the banks have denied liability. So even though a complaint was upheld, we've brought a complaint at court specifically for the increase in the interest rate on top of the award. We're asking for compound rather than simple 8%, and you'd be amazed how that uplifts the value of the claim. We've done that, and kind of surprise, surprise, Halifax / Lloyds in particular have thrown down the gauntlet and said we are denying that we missold the PPI, even though they upheld the complaint a year ago. They're utilising technicalities of the law. They're denying that for purposes of legal proceedings that they missold the payment protection insurance, and so they're putting us to proof that the product was actually missold. So we're having to kind of go back and prove the mis-selling all over again to a a legal standard rather than, if you like, a complaints sort of handling financial ombudsman service, internal banks complaints handling department standard. So I'll keep you posted on that. Hopefully this is just, because as with any new enterprise, this is just the teething problems that you get when you are trying to establish a new business. But it does mean, and I should hasten to say for any consumers out there, any of consumers out there who are my clients in these payment protection, these what we're calling them is true loss PPI claims that we're running through the small claims court. There's no real detriment to the client because we are paying for the litigation primarily, and we are taking a percentage of any damages that they win. But it's costing us far more than will be covered by that. Don't worry. We are taking this business model and this unit, the true loss unit, very seriously indeed, and it just may be that it'll take rather longer than we originally anticipated to get redress. Not everyone's going to be a winner, but these are test cases. But we hope that at least a few of these true loss claims will eventually be successful. So that's where we are with the true loss unit. Now, if you are, because this is how we felt a year ago in July, when we went, hang on, where a consumer has got a credit card borrowings, a balance on a credit card, especially with the same bank who has lent them the money for the loan on which has been stuck a single premium payment protection insurance product, hang on, it's not appropriate to simply add simple 8% on top of the PPI, the PPI redress, the refund of the PPI premiums. That's not appropriate because simple 8% doesn't reflect the true loss to them, because they could have used that, whatever it was, £50 a month that they were paying in respect of the PPI part of the borrowings, to reduce their credit card balance. And if it was with the same bank, the bank is kind of being unjustly enriched by taking compound interest with the borrowing facility on a credit card that is provided to a client, whereas only giving them simple 8% back on a PPI product on their fixed term loan that they've admitted has been missold. So you see how it doesn't seem fair, and the law in 2008 shifted in a seismic way such that people who bring claims in the courts can now, if they can prove it, they can now plead, it's a technical legal word, prove that their true loss is a lot higher than can be represented by simple 8%. A lot of people get excited about winning liability and I've proved that you missold this insurance product, but the real issue is not that it was missold, but it's how much are you going to give me? Are you going to give me full redress? Are you going to give me what I'm truly entitled to? Are you really, in the words of the Financial Ombudsman Service and the Financial Conduct Authority, going to put me back in the position I would have been had you never flogged me this dodgy product, Mr. Bank? So that's the that's the issue. So so I've covered now I've covered the next item on the list below, which is this issue of full or compound interest, and as I say, it is the eighth wonder of the world, and that's a quote that's attributed to Einstein, amongst other people. And those clever people across the river there in the city, they know that better than anybody, that compound interest doesn't just increase the amount of your redress by 10%. You're getting back. You're a consumer, okay? You get a cheque in the post for £3,000 from good old Lloyd's. And you think, way, and it's let's say it's a fixed term loan for £10,000, and they stuck a £3,000 PPI product, and you wanted the money for, for a loft conversion. And anyway, that was in 2005. You've had this loan for like 10 years, and they've given you £5,000 in redress for that £3,000 PPI product that was missold to you back in 2005. What do you think? Well, yeah. £5,000, that's great. That's £5,000 I didn't have now, and now I've got. So I can go and, I don't know, buy a car an old second-hand car, probably for £5 grand, but I can buy a car. You know, so you get all excited and you accept their offer. Now the banks know that, they're not daft. They know they dangle that carrot and they send you that cheque. You're going to want to cash it immediately and go on holiday to the Bahamas as well as buying a car. So but you've got to, you know, just engage your brain a bit and say, is that full redress? And if that product was missold to you in 2005, and don't forget it's single premium, which means it's you've borrowed £13,000, and you're paying interest on that £3,000 of the PPI over 10 years. The simple 8% on top of the redress of the PPI premiums plus the interest, the simple 8% on top, if you've got a credit card, is not very good redress. And the compound, if you were to compound that £5 grand amount, you'd probably be looking at you could be looking at £10,000 payout rather than £5,000. So that's a rather rambling illustration, but just simply focus on this. A £5 grand cheque that you're getting now, in circumstances where you had a credit card with a balance on it, especially if that credit card was with the same bank, for 10 years, that £5 grand should probably more likely be 10 grand. I mean, it could be more. I'm kind of being slightly conservative. So you see how compound interest is a wondrous thing, and the older, obviously, the loan, then the bigger the effect of compound interest, because compound interest has a sort of an exponential effect for some bizarre mathematical reason. So over time, the effect of compound interest is even greater. So if it was a 1995 loan, you'd be entitled to £15,000 now rather than £5,000. That's the sort of yardstick that you should use. So the next item on the list there is true loss cases, and I've slightly got them jumbled. I have mentioned that issue just now. We have been, as I say, running these cases, but we are having to deal with the issues of liability and prove a whole second time that the product was missold. Now I just wanted to touch on no win no fee quite briefly, but I think a lot of consumers out there, I spoke to a chap a couple of weeks ago and I said, look, I used to run cases, all my cases I ran on the basis that if we win, the consumer gets the full damages. He also gets back the cheque for £500 that I these days require consumers to pay up front on account, £250 if they're financially challenged, and then if they win they get that back too, as well as the full redress, and the other side pays my legal bill. I'm having to now tell people the law changed on 1st of April 2013, and I may now need to take a percentage of your damages, like one of those terrible 2-bit claims management companies, and that could be in the region of 25 or even 30%. And unfortunately what has happened is that the no win no fee regime has been somewhat dismantled by Parliament because of the personal injury abuses, and it's impacted on us adversely, and we find it very difficult to insure your case against you losing and not having to pay the other side's legal bill. So that 25 or 30% pays for the insurance that we need to take out to protect you from having to pay the other side's legal bill in the event that you lose. Now previously the other side paid for that insurance, but after 2013 we can no longer recover anything relating to insurance from the other side. We have to bear that cost ourselves. Also, we're no longer entitled to uplift our fees, charge a success fee that we can recover from the other side. And it's made it more difficult, not impossible, but more difficult to run this litigation, and so that is why I'm now tending to tell people they may have to lose up to 25 or even 30% of their damages at my discretion. I don't necessarily always exercise my discretion, and in fact I won't be doing it in one of the most recent cases coming up. but it's going to be more likely than not going forward that you'll have to part with up to 25% of compensation. So that is change the law. That covers the next item on the list there, which is the 25% issue. I just should say that I leave it to sort of within my discretion whether to take that 25%, because I don't want to end up in a situation where I've run a piece of litigation that's been expensive and time consuming, and the consumers won, but the consumers won a hollow victory because they're getting back perhaps the same amount that if it was, say, a true loss case, they're getting back the same amount that they were originally offered, and then I'm having to take 25% as well. So you know, I try to leave a little bit of latitude in the way things work. So next on the list there is the interest rate swap update. Now this will concern businesses rather than consumers, but it will concern you know, unsophisticated businesses, and a lot of people who've been sold interest rate swaps fall into the categories of things like, say, farmers or care homes, or people, property companies, people who are not professional developers, but people who are dabbling in the property market. Those sorts of unsophisticated businesses, as well as other range of businesses, have been missold interest rate hedging products, as they're called, in quite substantial quantities. I was with a financial expert yesterday who says that the figure may be as much as 100,000 of these products were missold, and I hadn't realised until quite recently that they may be missold in a systemic way to small and medium-sized businesses, unsophisticated businesses, as payment protection insurance has been missold to consumers. I.e., the bank says, you want to borrow some money, fine, we encourage or require you to take out an interest rate swap in order to protect your, well, it's not quite the right word, protect, but we require you to take out an interest rate product alongside your loan. Of course, quantities are a lot higher. We're not talking about 5,000, we're talking about 50,000 or 100,000, and the consequential losses can be a lot higher. So for any professional who might have stumbled onto this website, or businessman, director of a company, you may be in trouble in administration. You may be being represented right now by an insolvency practitioner. My mantra about these interest rate swaps is you really need to check the quantum of any offer that is made to you by the bank, because there is such a wide latitude. Not just what I was referring to earlier, perhaps a compound interest award instead of simple 8% on top of any redress, but also the consequential losses in terms of the impact it's had on your business. Because I dare say that the banks will make a passing, an initial offer that's just the very basic refund of the interest rate swap product, that doesn't compensate you for your consequential loss. And I'm starting now to work with insolvency practitioners who realise that this is a reasonably or very complex area, and that's why they're sort of giving the problem to me. I take a percentage of any redress that we get. So that's interest rate swaps, and it's beginning to appear that it's, I say beginning, it appears, perhaps appears isn't strong enough. It's clear that interest rate swaps have been sold in really rather substantial quantities, and from 2001, I mean, this is anecdotally speaking to my finance wizard who's handled dozens and dozens of these interest rate swaps. You know, from 2001, it may be that for major banks, he says, pretty much every loan where someone has got an asset, every loan has been, the business has been offered an interest rate swap alongside the loan. So finally, I'm just going to conclude with new case law on the area of financial mis-selling litigation. And I think that the the relevant update in this respect is to say that generally there's a couple of, there was a Court of Appeal case, Conlon and Plevin, a conjoined appeal, and it was quite seismic insofar, well, I say seismic, it evolved the law in a consumer-friendly direction. By the Court of Appeal judges said, we disagree with our own Court of Appeal decision of a couple of years ago in a case called Harrison, in which we said that providing the banks can prove that they've complied with the rules and regulations of the FCA, providing they've prove that they've complied with the letter of the rules, then there can be no successful mis-selling claim in case of payment protection insurance. And this case, Conlon and Plevin, vigorously, really undermines that Harrison decision and says no, that's not the case. There will be circumstances in which the bank may have ticked the boxes in terms of showing it's been compliant, but actually it's been a mis-sale. And one of those two cases, because I think one either Conlon or Plevin settled, the other one's gone now to the Supreme Court, which the Court of Appeal encouraged for further guidance on this issue. Generally, I've posted on the case separately. You'll see it down I think it's the left-hand side as you're looking at your screen. But it's quite interesting that generally the law is going in a consumer-friendly direction. So there it is. There's a whistle-stop tour, summer 2014 refresher. Things are quite lively here on the business front. I was authorised as a law firm in February of this year, having worked alongside other law firms for the past 3 years. I'm now finally master of my own destiny, in terms of running my own business in the way that I want the business to be run. And I have a new recruit, a paralegal assistant, who's joined this week. And so things are kind of looking up, looking quite interesting. Okay, well that's all for now. I'll be posting more regularly, I hope, in the future. I have been a bit lax over the past 3 or 4 months. I've just been consumed by the needs of setting up the business. But I should be posting more regularly now over the coming months. Goodbye for now.